many private Chinese companies and even state-owned enterprises in recent years have been far from easy. For decades, China's economic engine roared along, perhaps at an unsustainable pace. With the economy now slowing slightly, China faces a variety of challenges as it simultaneously carries out economic reforms and injects vitality into the markets. That makes the role of Chinese enterprises increasingly important, particularly private companies. With them in mind, China has unveiled new guidelines to nurture the development of private enterprise. What messages do these guidelines send out? How will it ease the hardship that private firms experience today? And how will the markets react? To discuss these issues and more, I'm very happy to be joined in the Beijing studio by Charles Liu, founder of How Capital, and Qu Qiang, Assistant Director of the International Monetary Institute at the Renmin University of China. We shall also speak via telephone with Kwang Ziping, who is the founding managing partner of Qiming Venture Partners. That's our topic. This is a dialogue. I'm Yang Rui. Welcome to our discussion here, Charles. First of all, your interpretations about the guidelines.
I think the guideline is more philosophical than practical because it provides confidence-boosting measures, but it's only one very small part of the overall transformation of the economy taking place now. Implementation of the guidelines, everything will be in the execution by the various level of government. So I'm not counting on the guidelines to provide a lot of support for the private companies that I'm a shareholder of.
This document was actually released towards the end of a stormy year 2019. So let's look at the timing against which this document was released by the central government and the State Council. Professor Qu, what do you make of the implications of the timing?
I think the timing is actually quite right, because in the whole world we're seeing the economy is slowing down, not only in China but all over the world. I think there's a thing we need to know. It's called cycle. It's like winters, like spring. We have this in the economy. This is formulated by people's behavior of human beings. And we have to acknowledge we have cycles. Now it's in the down cycle. But doesn't mean the government cannot do anything about it. We can, well, to a large extent, to smooth this whole process, and then we can see quicker rebounds. I think the government knows about this, and now they want to do something about it. I think this is the right timing to do so. And I do think the government realized that Chinese economy does need a restructuring.
Here is a cynical voice, if not a very critical one, about the performance of the Chinese authorities in the context of a market-oriented economy. Such cynical voices would argue, look, the less intervention we have from governments at different levels, the more prosperous and robust the private entities would be. So what do you think of the cynicism implied, the cynical overtones implied in such a criticism?
You know, I would have to say that there are good entrepreneurs and bad entrepreneurs, those with moral standards and those who don't have moral standards. So regulation is very, very important. I mean, when you have public companies with 16,000 shareholders, for example, where 15 billion RMB disappears, then something's wrong. The regulators have to look at this. I think in the private sector, there is a tendency, and there is this is the negative part of using one sword to cut across everybody and not making the distinction. I think the entrepreneurial side in China has a lot to learn in terms of what behavior is proper, and the regulators have a lot to learn in how to boost the positive behavior of entrepreneurs.
A second look at the underperformance of the non-public sector in the Chinese economy. Professor Qu, what do you make of the specific adversity that the Chinese entrepreneurs are facing at this defining moment of our economic performance?
Well, I think there are several things. Sometimes something is probably subjective, some is objective. The objective side, as I mentioned, we're now in the down cycle of economy. since economy is going up and booming for a while, you can anticipate that we will have a down cycle, that's for sure. But when the down cycle happens, the way out is to find an innovative way to do things, to find new business models, new product, and to find a new way of making money. But that is something, in Chinese economy sometimes we're not very good at. Well, we are very good at doing the old things to the perfect. But if we want to invent things out of nowhere, I think we need to learn from the advanced economy like in America. For example, when their economy is going down in the 1980s, and then they got the internet happening, and they got the IT booming. And then when their property, get busted, the bubble of the property get busted, and then they reinvented the Internet of Things and etc. So I think we need to find a new way to just revitalize our economy. This is something we need to do. But also we have some things that we can solve within China. For example, our legal systems against bankruptcy, and also our banking policies towards the SMEs, small and medium-sized enterprises. I think we can do more jobs on this side.
You are talking emphatically about the cyclical challenges that the Chinese enterprises are facing, state-owned or non-public alike. What about the structural challenges, structural economic woes? Which one would account for more of the problems we have at this moment, Charles?
I think the global slowdown is absolutely real, and it's impacting everybody, and it's going to impact China. The structural side in China, it is a shift away from labor-intensive industries, older industries, to newer, more sophisticated, technology-driven industries, and that's happening. Another part which is really amazing is over the course of the last 3 or 4 years, you see a major push in environmental technologies, which is something that's very good and people are very happy about. So there are structurally government guidance and direction in certain directions, which I think, that's it's quite positive.
I'm afraid another major factor concerning structural challenges in the Chinese economy is the relationship in general between the government and the market. One of the major reasons, I believe, for President Trump and his administration to launch preemptively the trade war against China is that they don't agree at all with our industrial policy. Namely, the government would play a major role, a pivotal role in shaping the roadmap of our economy. In short, what do you think of, say, a healthy relationship between the government and the market in the Chinese context? Or perhaps you can give us some more specific thoughts on how outsiders, international observers, look at this relationship.
Well, you're giving a really big topic. I don't think I can answer you within the 3 minutes or 5. But in general, I think in China, the problem is that the government is the referee, but also there's a player in the market. This is something troubling, the whole structure. I think the government actually should just stand up as a judge, as a referee, more than just being a player. But I do understand the Chinese government have its own consideration. For example, the protection of the national-owned assets, because this is a benefit of all the people. Just
particularly those of strategic importance to guarantee the stability of the society.
Yes, of course. Just think about in Prime Minister Thatcher's period of time, a lot of English coal mining companies has been privatized. And
despite the protests by the labor unions.
Yes, and they caused a lot of huge hardship of the people's livelihood. That's something Chinese government have to consider about. But all in all, I think we have to back off and think about, do we need just to control this state-owned assets in formality, or we can just back off just to control it by essence? For example, can we just hold the majority of the shares and let the private sectors to help the government to run it and just to share the benefit with all the people in the form of a tax or the enterprise's income? I think this is all the discussable area.
Thank you very much.
Just add one thing, because you referred to the U.S. complaint about Chinese governmental and market structure.
The industrial policies of the Chinese authorities.
That's right.
Have caused a lot of grievances from the American side.
But the American side really should look at what they're looking for too, because I think this particular issue is a non-starter. if you look at what the U.S. asked for, oh, buy $40 billion more agricultural products. That's not market-based. That's not WTO-based. No. That's saying, oh, Chinese government, you go and buy $40 billion worth. If COFCO goes out and buy and it's above market price, then is that market-driven? So
let me cross over to Dwayne, and a very successful investor in startup companies. Hello, Dwayne. Last year, President Xi Jinping visited a state-owned enterprise in northeastern China and said publicly, look, our principles of supporting both the state-owned enterprises and the private entities would be unshakable. 两个不动摇. When he was addressing the issue of 国进民退, it seems that the state-owned enterprises are making more aggressive inroads, whilst the non-public sector is putting to shame. So what do you make of yet another major issue concerning the mind and heart of the most consumers in the Chinese economists, employment, job market? Do you believe the digital technology promises to create more jobs? So what do you make of the prospects of the job market? Because we're talking about, you know, the underperformance of the SMEs.
Yeah, and we're certainly seeing a slowdown in many of the portfolio companies that we invested in, or you know, the markets that they address. But you know, I think the entrepreneurial spirit is alive and well in China. But when the overall economy slows down, and especially when the funding environment becomes more challenging, then small business naturally pull back a bit just to make sure that they have enough money for rainy days. And so I think, you know, as you mentioned earlier, some of the structural issues are having an impact, and secondly, you know, some of the more recent policy shifts and policy tightening on non-bank finance is having quite an impact on many of the small businesses.
Given the poor track record of many SMEs, it seems banking authorities in the mainland are pretty reluctant to actually look at the issue of equal access to loans. I mean, in a alleged fair way, because they call into question the credibility of some of the private entities. What do you think of this issue? It's not just about, I mean, employment or the other way around. It's also about the track record of the non-public sector.
Yeah, but that's where you know, our industry comes in play. For many of the young and innovative companies, they're an important source of funding is the private equity and venture capital industry. And as one of your guest Charles alluded to earlier, when we have a policy shift that sort of blanketly applies to all non-bank lending, it actually affects the VC industry quite a bit as well. So the RMB funding into venture capital industry, and then hence venture capital funding into these SMEs will also down quite a bit in 2019. So I think that's certainly having an impact on many of the especially the digital economy, the innovative economy, and these startups. And these companies probably ought not go to banks for loans anyway, because you know there's lack of collaterals and so on and so forth. So they were typical targets of venture investing. But if venture investing is facing challenges, then these SMEs naturally will face a challenge, and then indirectly it impacts employment.
Thank you very much, Dwayne, for joining us. Welcome back. Charles and Chang, what do you think of the issue of unemployment? Are you confident that the authorities at different levels will be able to live up to the expectations of Premier Li Keqiang in fixing the jobs of up to almost 8 million this year? Because we have less than 8 million university graduates, and that's a big issue for maintaining social stability. If these guys fail to be provided with the bread and butter, I don't want to go further in examining the consequences.
The potential consequences are quite serious, of course. But I think overall, from a macro perspective, China's economy is in a transformation. It's in a very, very big transformation of going from labor-intensive manufacturing to more sophisticated manufacturing. Actually, to have a labor force which is well educated and adept and moving in the technology direction is actually a good thing. And the latest things, well, 10, 15 years ago, it was real estate, then it was infrastructure, high-speed rail, and so on and so forth. What we see today is development of digital infrastructure. The about to be launched digital currency, 5G, ETC, all of these are digital infrastructure which will move China to the next phase, next direction. And the young people who are coming out are quite adept at this, much better than those in the US. I mean, China has much more STEM graduates, science and technology.
In my early discussion, Chang, in my early discussions with Charles about whether the private entities can enjoy equal access to loans and funding, he's pointed out wisely. Some of the heavyweight players like Tencent, Alibaba, Huawei would never have any shortage of funding. They enjoy the privileged and preferential policies from local authorities or even from Beijing. So what do you think of the issue of financing vehicles for the non-public sector?
Well, I think the banks are not doing a wrong job. First of all, one thing I have to correct is that even Tencent and Alibaba, they're also sometimes suffering from a lack of funding. That's for sure. Yeah, they just don't tell you. But they do have a lot of channels for sure.
But what about their IPO in Hong Kong? I mean, Alibaba.
Well, for now, well, all kinds of enterprises, they all have cycles. So sometimes they need extra money, that's for sure. That's economic rules. And secondly, I don't think banks are doing a wrong job, because if you learn the basics or the 101 of finance, you will understand. Either you lend to the ones with a bigger size, with enough collaterals, or either you charge them with a high interest rate, so you can cover the potential risks, because the whole finance is based on the pricing on the risks. That's how it works. So if you want your banks to be safe, if you want your deposits in the bank to be safe, you better lend the money to the safe companies, not the SMEs. But the thing is, in China, the wrong is not going with the banks, but with the whole financial structure. That's the reason why we need a restructuring. In China, we don't have enough VC and PEs, the one who have a higher risk preference, the one who really understand how to navigate through the risks, to find the potential SMEs. Just think about Tencent. Tencent just 20 years ago, they just wanted 1,000 coal companies for just millions of dollars. That's it, and would close down. And at that time, Tencent probably only have thousands of employees. But luckily, Tencent have good funding from the VCs and PEs. And now, guess what? Tencent employs lots and lots of people, times and 20 years ago, and they now becomes a major employer. That's the whole reason why we need a better financing system, multi-layer, not only banks, but more.
I would add also, the banks are not wrong, but also they're not right. It's very easy for the banks to go and say, I lend to SOEs. Then there's no problem, because it's one pocket to another. But there are possibilities in Western banks of lending to slightly less risk-averse situations. And I think opening up of the banking sector to foreign bank participation will allow Chinese banks to be more flexible and learn how these things are done. Of course, not into subprime and derivatives and so on, but banks can be more flexible with small and medium-sized companies as they have been in Europe and the United States. And that's something that the opening up of the financial services sector in China hopefully can bring about some positive results.
Undoubtedly, there is the issue of public sentiments, which are not quite in favor of the image of private entities. However, we have a different image about the dynamics of the private entities. For example, the steady increase of exports and export-driven performance of the SMEs. And that has put the SOEs to shame in terms of innovation, job creation, as particularly contributions to exports. Why do you think, despite the trade war, the SMEs could still give a satisfactory performance?
Well, for me, I don't think this has anything to do with a trade war, first of all. And secondly, I do agree with you that SOEs does have a low efficiency. That's not only China. Just look at the whole world, in France and in UK, and a lot of European countries, and also in Australian companies. If you look at that, that's something happens. Why? Because their major pursuit, their incentive, if you know the gaming theory, we know the incentive. Their incentive is to maintain the safety of the assets, to maintain stability, not running after the profit. Therefore, they will act more, well, they will act less innovatively. They will try to play safe. That's the reason why of the low efficiency.
You're talking about the ability for the SMEs to be flexible. What do you think of, for example, the prospects of having more transit trade through ASEAN countries, alternative markets, instead of pinning their hopes on North America, where you have the poisonous pill, and Europeans who are more skeptical?
Yeah, it's absolutely already happened, because if you look at China's trade with ASEAN, it's up 20% this year. Of course, ASEAN's trade with the United States was up 18% or something like that. So there could be some transit shipments here. But Chinese entrepreneurs, small, medium-sized entrepreneurs, are flexible and they can turn on a dime. If it's necessary, set up shop in Burma and Cambodia and Thailand and Indonesia and Malaysia. If necessary, focus more on markets which are more friendly, and they can do that very quickly. SOEs is much more difficult.
When we look at the image and dynamics of private economy in China, I wonder if you have done any research about the second generation of the wealthy families. Most of them are well educated in Europe or North America. They come back with the confidence more about digital technology instead of a labor-intensive manufacturing that their parents relied on in the honeymoon period of the trade between the United States and China. So what do you think of their ability to inherit the wealth from their parents, or they would rather opt for an entirely different path?
Well, for me, if you're the rich second generation or not, it doesn't matter. Actually, in China, we also have a saying that you cannot be rich more than 3 generations. Well, probably in America, they have a longer history of rich families. But I think the more important thing is...
Let me add one more point to what you said, a wise statement concerning sustainability of the private economy. 为富不仁，富不及三代. If you fail to do philanthropy, you won't be able to survive 3 generations of the family wealth.
Yes, that's true. For me, is that I see a lot of outstanding second-generation entrepreneurs. They're doing perfect, like you mentioned. They were highly educated. They have huge responsibility, the sense, and also they know how to make money out of the new economy. But also we see also there's the majority of the second-generation entrepreneur. They tend to, they're very conservative. They probably grow up under great pressure of the fathers. You have to protect the family business and do the right things. So sometimes they're not very daring. They cannot be innovative. They cannot do whatever they want. The papas still behind the curtain to tell them what to do. So if this is the case, I don't think they can shoulder up the more responsibilities. So I think we need to analyze this case by case. But in general, I think in China we have lots of good talents. The thing is that we have to let the idea flow. We have to, create a new culture in China that we can afford the failures and the businesses. We encourage people to take advantage of the business opportunities and to take risks and to be innovative. That's the other most important thing.
Charles, I wonder if you have done a comparison, a serious comparative study between the private entities in the Pearl River Delta region, which has of course been turned into a part of the Grand Bay Area, and those township enterprises, particularly in Zhejiang, Jiangsu, and Shanghai, the Changjiang River Delta region. In the first case, I was told through reading a research report that the family-based businesses in the Pearl River Delta region were able to quickly wake up to the shift in, from labor-intensive to technology and capital-intensive industries. Therefore, they were more successful than those in Zhejiang. For example, Zhejiang was the first province that saw the pickup of the non-public sector in the early days of China's reform, right?
I think we shouldn't really talk about it in very specific regional terms, because there are a lot of very sophisticated Zhejiang entrepreneurs who've done very well also. I think what's significant is many people were successful in certain business model. Do real estate, get a plot of land, borrow from the bank, build, pre-sell, so on and so forth. But they find other businesses are not the same. And many have ventured to try to get into other businesses and have failed. I think the level of sophistication, the ability to analyze the macro as well as the micro situation, and the ability to gather global information is becoming increasingly more important for Chinese entrepreneurs. They have to become more sophisticated rather than rely on what worked in the past.
In the age of AI, big data, cloud computing, Chang, what do you make of the sustainability of non-public sector performance?
I think they do just great, since this is a cutting-edge area.
Better than the SOEs?
Of course, of course.
Is that your understatement?
Because this is high risk, as I mentioned. As SOE, their pursuit is not risk and profit. So that's the job of private sector, like always in the world. The Industrial Revolution always led by the private sector. Like in China, the Chinese internet industry is probably one of the most successful in the whole world. Who did that? Private sector. And I think they will just do fine in the AI period and cloud computing period of time. You just mentioned about the guidelines from the government. I just want to add more about this. Actually, I don't think government need to just impose any guidelines on how economy should run. What government should do is not tell the tree how to grow, but just create the most suitable soil. The whole soil is that not about banking and not about the policies. It's just about education and a legal system. The education system in China has, they should have a more closer relation with economic growth. In China, when we stress on education just to put more examination in there, higher scores, that's not right. We need to let the students to have, the innovative ideas, tell them to do the new things, just think out of the box. And also, we need to reform our legal system. This is also not mentioned.
Perhaps it's not very much about soil or water. It's very much about the climate change, low carbon development. With that, we come to the end of this edition of Dialogue. Thank you very much for being with us. I'll see you next time. Goodbye.